Todd was really amped up for us to talk about the Bank of Canada. We were on last week, obviously, when the Bank of Canada met, and you had some people who were really rared up.
Rared up?
Yeah, rared up.
I don't think that's a word.
Maybe not. Maybe not be. That might be a local term. I don't know. You had some people who are very excited about the Bank of Canada.
Yes, and I find it funny because to me it's amazing that somebody would do anything to buy a house.
Yeah.
At 2%. Let's just throw that number right there, or 2.2 or 2.6 or whatever they were. But suddenly 2.8, it's like, whoa, I have to be cautious now. It seems strange, does it not?
It does seem strange. And I think like some borrowers, obviously if they were in a variable rate product, some Canadians are still drunk on cheap money.
I'm in a variable rate product.
And are you drunk on cheap money?
No, it went up a little bit.
It went up, but guess what? Yeah. It's still pretty low.
It's still pretty low.
And we're still at pre-pandemic prime rate. The prime rate before the pandemic struck, Todd, was 3.95.
Yeah.
We have very short memories.
That's true. And who's to blame? You mentioned you kind of vilified the media.
I vilify the media. We're on the media. We're on the media. We are the media. I don't know. I can vilify myself sometimes. I think we're all at fault here a little bit. I think that variable rates have always been lower than fixed. It still is lower than fixed right now, Todd. I think that we got used to it being very, very cheap to borrow money.
Yeah.
And guess what? Now it's a little bit more expensive. But the economists are saying that we're going to see more increases. And borrowers are like, well, what do I do? The fixed rates are very high right now. Should I convert into a fixed? Yeah. And guess what we tell them? You need to weather the storm. There's going to be more increases over the next 12 to 18 months. And some economists think that the prime rate is going to get to somewhere around 5%. They think that's kind of the median mark. And right now, when we qualify a borrower on a variable rate mortgage, we use a rate of 5.25 to qualify them. So we know they can afford it.
Yeah. It's called the stress test, right?
It's a stress test. Yeah. And that's what we use. And today, it's actually easier to qualify for a variable rate mortgage than it is a fixed rate mortgage.
And why is that?
Because you qualify at 5.25 or your contract rate plus 2%, whichever is higher. Mm-hmm. And right now, most fixed rates are between 4.25% and 5%.
Yeah. If
you have a 5% fixed rate contract right now, you are qualifying at 7%.
Yeah.
But your same, cohort of borrowers that are taking a variable rate mortgage are going to be qualifying at 5.25%.
So the variable rate right now is what?
A good variable, if you're buying a home and you're getting a high ratio purchase, is somewhere between 2.7 and 3.2%, depending on what lender you're going to use.
Yeah.
Obviously, on a refinance or a rental purchase, you might pay a little bit of a higher rate.
Yes.
On a fixed rate, we're looking at usually like mid to high 4s.
Wow.
So, and the variable aren't necessarily half of where the fixed rates are, but pretty darn close.
So the variable, would you anticipate going up to the 4 to 5% in the next couple of years?
I do. I think probably by a year's time, 18 months time.
Yeah.
The variable rate might be around that 4.5%, 5%. But the one thing that we sometimes forget about, we have all the savings today, and obviously lower short-term interest rates have a value. There's a future value of money. Mm-hmm. And the other thing that we need to remember is many economists think that we're going to be going into a recession.
Yeah.
And what happens during a recession? The government wants Canadians to start spending again. So they're going to lower the key overnight rate, which is going to lower the prime rate, which is going to become, money's going to be on sale again.
Yeah.
And things are going to be coming on sale here very, very soon. But there's going to be a storm. We've been saying there's going to be a storm for a while, Todd.
So what's a storm? Identify a storm.
I think a storm is going to be more increases. Are we going to see more 50 basis point increases? We might if inflation doesn't start coming under control.
Yeah.
But the Bank of Canada is going to do a slow burn probably for the next 12 to 18 months, depending on, obviously, I'll caveat it, what happens with inflation.
Yeah.
But the rates are not a runaway train. And the rates are also not going to the moon. I have younger borrowers, and we've done a mortgage for them, 1, 2, 3, 4 years ago, and they're not up for renewal. They're kind of like in the middle of their term or whatever, and they're calling me and they're saying, my parents really, really think that I need to convert into a fixed rate at whatever rate I could possibly get. I said, okay, borrower, you're at prime minus 110 basis points. So right now your rate is, let me see, 2.6%. If you convert into a fixed, you're going to be somewhere around 4.25%, 4.5%. It's going to almost double your cost of borrowing. Are you sure you want to do this? Are you sure? And they're like, yeah, I'm not sure. I don't want to do this, actually. I want to weather the storm. I know it's going to go up, but I'm pretty sure it's going to go down. I said, you know what? I'm with you.
Yeah.
I am with you. You took a variable because that's what you wanted. You didn't take a variable because it was cheaper. You took a variable because you knew what the risks were. You knew the risk that it's going to go up. You know the risk that it's going to go down, and that's why it's a variable rate. And historically, borrowers do better in a variable. And there's a lot of pros to the variable, Todd.
Yeah.
Obviously, one of the big pros is if you break the mortgage early, it's only 3 months interest. Now, if you're losing sleep at night and you're in a variable rate mortgage, you can convert into a fixed with no penalty with your lender, but you're subject to whatever the rates of the day are. So that's obviously something to remember. Mm-hmm. Once you convert into a fixed, then all the terms and conditions of that fixed rate are going to apply. And if you break that fixed rate early, be prepared to pay.
So there's no underwriting that's required.
You can just convert.
You just convert. There's nothing. It's your choice. There's no potentially you can't do that.
If you want to break that fixed rate early, be prepared to write a big fat check.
How much?
Might be 3 months interest, or it might be an interest rate differential, which is ever higher. Banks are like the casinos. Listen to what I say. The banks are like the casinos. And what happens with casinos? They never lose.
Yeah.
And bankers and lenders are just salivating. They are rubbing their little hands together saying, borrower, you should definitely convert. And I've heard there's bank branches that are like calling everybody who's in a variable rate. My clients call me and tell me, and they laugh. And they're like, you're never going to guess what they tried to get me to do. And I say, oh, let me guess, they probably want you to lock into a fixed rate. They're like,
so it's more money for them.
It's guaranteed return.
Yeah.
And you know what is guaranteed return at a much, much higher rate.
Yeah.
And right now there is some fear mongering going on. The rates are not going to the moon because guess what? The federal government is in bed with Canadians and homeownership. They are insuring a lot of this risk already. And through the Canadian Mortgage
CMHC.
Housing Corporation, Sagen, and Canada Guarantee, it's all government backed in essence.
Yeah.
And they are in bed with Canadians, through obviously the risk tolerance. They're protecting the banks. We're not going to be in a situation, that happened in like the 70s and 80s when the rates were in the teens. That's not happening.
Why do you think people keep invoking or talking about that, citing those as an example?
I think it's still recent enough that we remember.
Yeah, because your parents or my parents, or
I'm sure they are sure. My parents had a property in Vancouver, and they had a rate in the teens. Yeah, and it was at low teens, and it was very early 80s, and they sold their house, and someone actually assumed their mortgage because it was such a good deal. I think their rate was like 10%, let's say. Yeah. And at that point, the rates had gone to like 20%, and somebody assumed their mortgage because it was so, valuable because it was such a much lower rate. We're not going to see rates like that. Will we see rates at 5%? Yeah, we will. That's the median mark, Todd. Mm-hmm. And things will start balancing out. But the interesting thing to think about is a recession on the horizon?
Yeah, okay. All right, we got lots more to talk about, a couple more segments. It's Mortgage 101, your guide to home ownership. We'll be back.